Now we go to your case D. This is an exciting case since there are a lot of new words over here, but I think you should always remember you should not be scared, especially we have the same rules and principles that we follow, and then we are just returning back from our old discussion on taxation. And as what I've said, the discussion or the previous discussion can be carried over to the many discussions that you will be encountering in taxation, not only for income, but of course for your business and for your transfer. We can use that one. Okay, so let's proceed. We have to know first our case. Given the following data during the calendar year 2018, determine the taxable income assuming that the taxpayer is a citizen of the Philippines without a dependent child. Take note of this. Under the train law, we are not considering this one anymore if he has a dependent child or if he has no dependent child, because under your train law we already eliminate our additional exemption, and that includes our dependents. Okay, let's proceed. We have business income of 800,000, business expenses 500, compensation income of 500. We have a capital gain, capital loss, capital loss. Take note, this is your ordinary income or your income that is supposedly subject already to your taxable income, subject to your basic income tax. So 800 of a business income, we have 800,000 pesos. Next, we have business expenses of 500,000 pesos. Compensation income, let's just put it here, 500,000 pesos. These items are not subject or not under your holding period rule. Take note of that. Next, we go to your capital gain on sale of bonds held for 20 months. For 20 months, that is a gain. However, 20 months, that will tell you that it is only 50% recognizable. Next, capital gain on direct sale to a buyer of shares of domestic corporation held for 6 months. Take note, yes, 6 months. However, this is a direct sale to buyer of shares of domestic corporation. What kind of tax is this? This is totally under your capital gains tax or CGT. So this gain is not subject to basic income tax. Eliminate this one. You should be adding the learnings that you had learned from the previous discussion that is on capital gains tax. Next, capital loss on sale of car held for 10 months. Yes, this is a sale of car, a personal asset. So this is a capital asset that is not subject to your CGT but is subject to your basic income tax. 10 months over here will tell you that this is recognizable 100%. Let's go to another loss over here. Capital loss on sale of land in the Philippines held for 2 years. Land here is your real estate, your real property. So we consider this as your capital asset subject to your capital gains tax. So capital gains tax, this is subject to capital gains tax. So this is not subject to basic income tax. Eliminate that loss. Now we go to here. Capital loss in 2017. So we have a net capital loss from the year 2017, which is in the amount of 200,000 pesos. The taxable income in 2017 was only 100,000 pesos. If luckily this year, 2018, we have enough capital gains, so we can absorb not the 200,000 over here, but the lower between the net taxable income during that year and the actual capital loss, the lower is 100,000 pesos. However, let's see if this amount can be absorbed. Okay, let's recognize this one. We have here a gain of 50% of 60,000 pesos. So this is for your capital, this is for your ordinary income. This is for your capital asset. So we have 50%, that is 30,000 pesos. This is not included. We go to your loss. For your loss, there is 50,000 pesos. However, 50,000 here, do you think can it be absorbed 100% since we have only a 30,000 pesos capital gain over here? No, it can only be absorbed to the extent of 30,000 pesos. That means we still have a remaining or a net capital loss for the year of 20,000 pesos remaining. Now this is 0. So we have no additional income or other gain over here. So let us solve for the taxable income. This is a deduction. Let's solve. 800 minus 500, oh my god, plus 500, that is again the 800,000 pesos. So your taxable income is 800,000 pesos. We could not deduct this anymore because actually in the year there is no enough gain. If there is a net capital loss for that year, technically you cannot deduct what was supposedly to be carried over from the last year because our priority is just to deduct whatever it is intended for this year. Since there is no available, this 100,000 pesos now will say bye-bye, and for the year 2020, it cannot be carried over anymore because this is a short-term capital loss only. Okay, so let's return and proceed to case E. So I have already put some data over here since it is just the same to your case D. However, as I had scanned over the materials, I had noticed that it's still the same data from your case D. So I had to change an amount so that we can add new detail. So from 60,000, just change the amount to 600,000 for your capital gain on sale of bonds held for 20 months. So instead of 60,000, use 600,000 pesos. Okay, so we're gonna answer now. So for 50% of 600,000, that is 300,000 pesos. And next, for your 150, this is subject to CGT, so we will not include that. We have a loss of 10,000, 10 months, that is 100%. So that is a deduction of 10,000 because obviously, as you can see, we have enough capital gains over here. Next, we have a capital loss on sale of land in the Philippines held for 2 years. So this is subject to CGT. We will not include it here. Capital loss in 2017. Again, net taxable income for that year is 100 versus your actual loss of 200, whichever is lower between the two. So this two, 100 versus 200, we will choose the lower amount. So that is 100,000 pesos. So 100,000 pesos is the loss that will be carried over for this year 2018. Do you think we can absorb the whole amount of 100,000 given that we have enough capital gain remaining? That is 300 minus 10, we have 290,000. So we have enough. So let's deduct this, your net capital loss carry over from the previous year. So 300 less 10, that is 290, less 100, that is 190,000 pesos. Am I correct? Of course, in case of doubt, use your calculator. 300 minus 10 minus 100, you get 190,000 pesos. Perfecto. Okay, so 800,000 pesos less 500,000 pesos plus 500,000 pesos, that is 800,000 pesos. If you are in doubt, use your calculator. So 800 plus 190, since you're asked of the taxable income, so you just add it to 800 plus 190. That is, of course, 990,000 pesos. If you are in doubt, use your calculator. But if you can do mental math, why not? To save the battery of your calculator. 800 plus 190, that is perfectly 990,000 pesos, which is your taxable income for the year 2018.